Okay, so there's a few things I'm going to talk about. Number one is going to be what is the mental game of trading? Why do we care about it? Two, we're going to go over your ABC game. The three, and then after that, I'm going to kind of go over the last three: data collection, mental hand history, goals and plans, and the emotions. Those will be the worksheets that I sent out to everybody. And if you do not have them, just shoot me a DM and I will get them to you as soon as I can. And so, first, like, what is the mental game of trading? That is, it's actually a book by a guy named Jared Tendler. So I did not make these sheets. I just know how to get them, and I have the book. I've read it a shitload of times, probably at least 5 or 6 times, and I fill out these sheets every day myself. So I just distribute them out to everybody else in our Discord, so they can get them and use them for themselves for their benefits as well. I will not be going over like any sort of risk management techniques or strategies or anything like that. I can do that in another stream if we want, and that's just completely different. Today I'm going to kind of focus more on the emotional side of it. And so that way, how you find the triggers of your emotions, how you can tell when you're going to have an emotion come up before it happens, so you can actually use that to resolve the emotion faster. And so that's why we care about the mental game of trading, because emotions is about 80% of our trading. Your What you think, what you feel, and the actions that you do during your trading can have more of an impact on your P&L than your actual technical analysis. You could have the best technical analysis, but still be a shit trader because you don't trust your PN, you don't trust yourself. Your mental game isn't there. So th that's why it's called. There's a thing called accumulated emotions. Similar how the stock can accumulate, your emotions can accumulate. So when you start having bad days, when you start having negative emotions, if you don't do something to relieve them, then they will start accumulating. You will start getting more and more, and they'll come up and they'll come together and they'll build and they'll build. Kind of like just holding in anger. When you can hold in anger, those smallest things just blow you up after a while. And so it's the same thing. Just little things, if you don't resolve them throughout the trading day, they're going to build up, build up, build up, build up over a week, over a month, over a year, and then eventually you can blow up from those accumulative emotions. And vice versa. You can accumulate your positive emotions and bring more of a positive momentum towards your way. So if you everything continues to go well, you can kind of use that momentum to accumulate your emotions and continue that and try not to get cocky at the same time, obviously. And now, so then you start with your ABC game. So what is that? That is your A game is your best, your B game is your middle, your kind of your mids, and then your C game is your worst game. So you're only as good as your C game. You can have a great A game, you can have a mediocre B game, but if you don't have a decent C game that you continuously try to work on, then your A game will kind of fall. You'll have a wider spread where some days you'll find yourself just blowing up accounts more, having good win days, a couple win days, and then giving all those profits back. And so that's where you have to notice what you do on your best days and what you do on your worst days. So for an example, one of your C game might be you're more distracted in the market. You can see people talking about most random shit in chat. You're kind of hesitant and risk adverse. You're not trusting yourself. You're not following your rules. And that's more of your mental C game. And then you also have your tactical skills, which your mental skills and your tactical skills. So your tactical skills are what you're doing with your technical analysis. and then also what you're doing with your mental. So your technical analysis C game could be you're chasing the price, you're not following your loss rules so where you have a limit loss for the day and you just continue to trade trying to make back those trades, revenge trading, and you end up losing more. Another one that I always say for my C game sometimes is getting into trades without confirmation. You wait for that confirmation. When you notice yourself being in more of a C game, then you can write it down. You notice, okay, this is my C game and this is what I need to work on first. When you work on your C game first, and so this is our diagram right here. If you have a C game that you're in a lot and then an A game a lot, but no B game, you think of it more like a parabolic curve. And so you're going to be doing your C game the most and your A game the most, which will bring very wide swings in your P&L. And so if you improve your C game, then you can naturally improve your A game and it moves your curve up. So now your C game becomes your B game, your B game becomes your A game, and your A game reaches new levels. And so you're always working on, you find what you do on your worst days. And it's going to be different from everybody. I noticed in chat a lot of people were on their C game today, where people had negative emotions, thinking, "Oh, the market's always out to get me. Anything I'm in is always goes to shit. Everything I touch turns against me." That negative talk is a C game day. That's where you have to tell yourself, you have to notice those emotions happening and coming up and write them down so then the next time they come up, you notice that and you will stop trading and you will work on those even more. And then a couple B game ones. I'm gonna go over skills that you can think of, and that way for your ABC game, it is on the worksheet as well, which I'll pop that up real quick for those that don't have the worksheet. Let me switch it over on Discord. Okay, so this is the worksheet, and this is where it shows your parabolic curve and how often they happen. Your A, B, C game for your mental game. So that's going to be your mind, and then your tactical skills. And so overthinking is some of your B game. Paying attention to markets that aren't moving, trading consolidations, losing focus, very similar to your C game, but I think losing focus is more of a C game than a B game. Um, Missing obvious trades, so you know the TA is there, but then you don't take the actual trade. You trading your P&L, which is more of, oh, if I'm down this much, I get out, instead of trading, oh, it's broken my levels, and then I'll get out. And then kind of going against your gut, letting people in chat, change your decisions. That's always difficult, is when people in chat have one idea, and then you have a completely different idea. You have to trust yourself to understand their idea, keep it in mind, but don't let that change your narrative. Because then it's gonna let yourself get stopped out. Don't change your narrative because somebody else has a different bias than you. Because they could be looking at it as something completely different. They could be looking at a lower time frame or even a higher time frame, and your idea can still work. And then when you're on your A game, you're more relaxed, you're letting your trades come to you, trusting your gut, you're confident, you're patient, you know exactly kind of where you can call it out. You can look at the market, say, okay, it's going there. If it moves up there, it's going to go here. And you can see everywhere. You can see the market in a lot better of a and better of a mind. Personally, for me, I find I'm on my A game the most after I work out, which is very interesting. I find when I get done with a workout and I start come back to trading, my mind is just so dead focused on everything and I see things so much clearer. So that's one thing for me personally, and everybody else has a um, different idea and different triggers for their ABC game. And so when you're doing this every single day, throughout the day, go through what are you doing and write it down. Take out this Excel sheet and add columns to it and put them in there. What are you doing on your B games, B days? What are you doing on your A game? At the end of every single day, think to yourself and write down what am I on, what did I trade? Was I trading my C game, my B game, or my A game? And why? Write down what you did well, write down what you did wrong that you need to work on. So that way you'll start to see a pattern. And that's where the data collection worksheet comes in as well. Right here, this is another worksheet from this book. And so during the trading day, you can once you have an issue, once you have a problem, you can write down the time, write down the day. Make sure you write down the time because a lot of times you can find that maybe your problem, you have the same problem on the around the same time of the day. So then it just tells you, okay, maybe I shouldn't trade at that time of the day. A lot of people get tripped up in the morning or get chopped up during lunch session. So they might notice this by writing in your data collection worksheet because you're putting the time down every single time. So you can say, okay, well, I'm not going to trade the morning session. I'm going to allow it till our 7:15, 7:30, 10:15, 10:30 Eastern time, a reversal, possible reversal time where we see a lot, and that might be when I start trading. You may miss more moves, but I can guarantee you're at least gonna make more money that way because you're not gonna lose more often. And so with this data collection worksheet, you have your instrument in situation, which is just what's the problem? What were you trading? What was the problem? What did you do wrong? Your trigger would be what made what was the first thing that you noticed that went wrong with your emotions or with your were you fidgeting? Were you getting irritable with your girlfriend? Things like that are outside of the market that are not in your computer. Write those down. Your thoughts, if you had any negative thoughts. Oh, I shouldn't have done that. I knew I shouldn't have done that. I'm fucking stupid. These dumb negative thoughts. Everything I touch just goes to shit. These Write those down because then you can recognize that when you start doing that, then you need to either stop trading or you need to walk away for a little bit. Get rid of those emotions, relieve those emotions by meditating, running, whatever you have. Your behaviors or your emotions, make sure you write down which ones you have, whether it's discipline, it's a lack of discipline, a lack of confidence or overconfidence, greed, fear. Write down what emotions they are, and it could be more than one. It most likely will be more than one, because like if your instrument and your problem is FOMO, then FOMO is not only a greed problem, it's a fear problem at the same time. Because FOMO, you're greedy because you want that to make that money that you see, but your fear of missing out, but you're having that fear of missing out. And so that is this, it's multiple emotions. Most of the time, your problems will be multiple emotions. So you'll have to dig into those layers in order to fill and fix, to resolve these emotions. Because they say, a lot of people try to say, I'm not gonna have any emotions. I'm gonna be an emotionless trader. How? You're a human. There is no such thing as an emotionless human. We have emotions. So to recognize and to resolve these before they become overwhelming and become a negative part of your trading is what's going to be key. Behaviors, that's very similar to the trigger, but this is the trigger is the first thing you notice. Then your behaviors is as it's happening, as you notice it more. And so that's where you can have maybe when you're a little bit annoyed, when you have a little bit of FOMO, you feel one way, but when you have a lot of FOMO, your heart's racing, you're looking at 1 minute charts, things like that. That's what's gonna that's your behaviors. That's okay. I notice that when I'm break it down into a 1 minute chart and my heart's racing and I'm trying to get every tick, then I got FOMO where I'm having a lack of discipline. And then if you got change in decision making, like if you're going back and forth, like we see some people do in chat, I'm long, I'm short, I'm long, I'm short, I'm long, I'm short, it's going up, it's going down, then you know that you're confused on the market. There's indecision in your brain in the market. And then what mistakes you make mentally and what mistakes you make um what mistakes you make mentally and what mistakes you make technical analysis. So review all of your trades. Did you not let it an entry confirmation for your entry? Did your were which mistakes what else did you allow that you can look back at and say, "Oh, maybe that was obvious, but it wasn't obvious at the time. But if you see it over and over and over, then it will become more obvious." Alright, so then that's the data collection. I'm going to go over the mental hand history next, which is another worksheet uh, from this book. And the mental hand history is almost the same thing, except it goes a little more into detail on it. And so just like the first one, you describe your problem. And so maybe your problem is you're having FOMO or you're having a lack of discipline. And then you have explain logical way why it makes sense, why that you're having this problem. So, okay, I'm having FOMO because it's going down and I'm seeing other people make so much money and I want to make money now. That's logical. Explain why it's flawed. So your problem is FOMO, let's just do for our example. Explain why, because other people are making money. I'm seeing other people making money. And then why is this flawed? Because you're chasing. You're chasing the market. There is, and maybe you don't have a good stop loss, and so that way it's not in your rules, but you're still having this problem. And then a correction to that flawed logic. Well, what would you do instead of having that FOMO? You would, this one would be a technical, so you wait for first, in my opinion, always when you're feeling any sort of negative emotion, take a deep breath. That's always rule number one for me. I always control your breathing because when you control your breathing, you can control your heart rate and you can control your mind. When you're on, when your heart's racing, when your mind's not working, when you're in your C game, your gut doesn't work as well. So control your breath. And then you understand, okay, I'm going to wait. This is flawed because you need a stop loss. So how do you come up with a correction for that stop for that? Wait for a lower high in order to get in for entry. And now you have, okay, you have your problem. You have what, why is it? Because you have this problem for a reason. So what is that reason? Even if it's not a good reason, why do you have it? Then you explain, okay, this is why it's not a good reason. And then your correction to what you would do instead. And then explain why is it correct. Better risk management. Risk management, higher probability of success. And then you can do this every single day with any issue you have in the market as well. So you can do both of the data collection worksheet and also the mental hand history kind of one in one together. The collection kind of goes over a little more of the emotions you feel, and then the mental hand history kind of goes over the logic, why it's flawed, how you can make it better, and what would you do, and why is that better way of doing this. And so those go hand in hand with every single problem you have. And the thing about these worksheets is you have to do them every single, well, you don't have to, but it's recommended. I recommend it to do them every single day. Review them every day before the market. Go over them a little bit at least once during the market. So during a lunch hour usually for the market. And then go over them again after the market and put in your new day's worth. And I recommend doing it within an hour, but maybe some people want to wait an hour and then go back through it so they can clear their mind and then review over their emotions you have. So that's always up to the individual. So now I'm going to go over this goals worksheet, which is very, it's pretty pretty self-explanatory, but there's a few other portions of it. Did I not yet be able to get this up? I did not be able to get that up. The main thing about the goals, I don't have the worksheet up for whatever reason. It's not working. But the main thing about the goals is it talks about your result goal and your result goal and then your process goal. So your result goal is what are you gonna get done? Your result, your actual goal. Maybe it's to get funded for a trading account. Maybe it's to make 2% of your account every single day. Those are your result goals. And then your second goal, and then your next goal. Why did it do that? Oh wait, I'm gonna go. I forgot to load trading view. Um, Hold on, my OBS stopped working for TradingView for some reason. That's fucked. Oh my god. I got disconnected. My bad, 1 second. Technical difficulties. There we go. There we go. Sorry, I had it to get it working for this. For the recording. So, back to our goals. So your result goal is what you want to get done. And our example was make 2% of your account a day, or maybe you want to get funded for a 100K prop firm account. Those are result goals. And that's kind of, in my opinion, a little more self-explanatory for that one. But then your process goals is how you're going to get there. And so what are you going to do with your goal and then your how? So maybe your goal is to to get a 100K account. Well, first, how are you going to do that? I'm going to work on my entries. I'm going to make sure I get X amount, 2% of my account per day. I'm gonna make sure that I only do 2 trades a day. I'm gonna make sure I have a stop loss limit per day. What are your goals to get how you're gonna get there? Because the process is just as important as the result. Because if you don't have a plan for your process, you will not have a plan for your result. And then last for this worksheet is the goal is your problems. So, of course, you're going to come up with some problems. Taking a loss, um, people in chat with different opinions. All of these are issues that you're going to have. Not waiting for confirmation for trades, trades going against you, everything like that. So you have to write down any potential problem you could have. Anything you can think of that could go wrong, write it down so that way you're not surprised if it does go wrong. And you can write down and then write a plan of what you will do if that problem comes up. So that way, when that problem comes up, if it ever does, you can look back in your worksheet and say, oh, okay, my problem was I'm losing trades. Now, what is my plan to fix that? I'm going to work on my entries. Um, I'm gonna review every single trade that I lost, why I lost it, why I got into it, where was a better exit, where was a better entry. Go over every single thing, journal it out. And so that way you can understand when you have a problem, when a problem comes up, how are you gonna deal with it? And so you should already know that before these problems come up. That way you can be aware of them when they happen much quicker. And so then last is each emotion. So the four emotional profiles that they have for this one that I sent out is greed, discipline, fear, and confidence, and anger. And I'm not going to go over what each of those are. Everybody knows what each of those are. But the thing that I do want to go over is the what I do want to go over is where it says injecting logic on the worksheet. So I'm going to pop up the worksheet. Sorry, it's kind of going a lot going back and forth. I couldn't figure out how to put it all in one. So I just pulled up the greed profile. So first sign you become for of your that you become greedy. So those are, in my opinion, that's mainly the trigger. So what is the first thing that you notice? Your heart racing, getting annoyed, things like that, and then corrective actions. How can you fix that? But then injecting logic, that is that is similar to the mental hand history logic correction. So where you put in why you're feeling this way and what is the correct way to feel, or what is the correct correct way to fix it. And then as it says greed levels, those are how greedy you are. So when you feel, so as on a scale of 1 to 10, what are your emotions per when you're greedy? So maybe I haven't actually filled this one out lately. And so when your number 1 greed level, that's your when you're at your best. You're relaxed. You're seeing people making money, yet you don't really care. You're no, it's not in your plan maybe, or you're gonna make your own money. You have your own plan. And then maybe your level 4 is when you're starting to feel FOMO a little bit. You're feeling, you're seeing people make money, but in the move against you, and maybe you're in the trade or you're not in the trade and you feel the FOMO, but you're not getting into the trade for the FOMO of the FOMO. But you feel it, you know it's there, but you're not acting on it. And then maybe a 6 would be you're getting into it, but you have a decent stop loss. You have this FOMO, but you have a decent risk management. So, but you know, okay, it's really not the best. I really shouldn't be, but it's kind of okay. And then as you get worse, you're 8. Okay, well, I'm gonna get in. I'm chasing this. I'm getting in anyway. I'm breaking my rules. That's kind of a level 8. And then your level 10, in my opinion, is you break your rules, you're chasing, you have greed, you're over leveraging yourself, you're getting in way too much, your emotions. And so then that's as you can write down what you feel for each level. So as you get more and more emotional, which one is it? And then technical changes, how is that affecting your market perception? How is that affecting what are you doing technically on your TA different at each level? And so as I was explaining them, they kind of went hand in hand. And then then you put in whenever you got greedy. And that way you can make a note because you'll notice these patterns happen over and over and over. They happen a lot in your trading. Maybe you're taking profits too quick. Maybe you're not taking profits fast enough and you're getting profits and then letting them go back to zero. That's greedy in my opinion. If you have 40% profits and then it goes back to zero and you don't take any and you cut back for a break even, that's greed. And so what are you doing? What is your history? And triggers I've already gone over. What are the first things? Anything that makes you greedy, seeing people make money, a crazy move that just went 20%, it's everything like that. 100% plays, 1000% plays. You want more, you want more, you want more. You're fiending for plays, shit like that. Um, and that's pretty much everything with this one. If we want, I can go more in depth of each emotion and kind of more of the psychology aspect with risk management, how to do risk management strategies, where to find entries, how much risk to reward you should have, things like that. We can go in another time. So if anybody has any questions, let me know. Now is kind of open for everybody. And if not, then I'll cut it here. Alright, bet. Alright, and so I'm gonna end the recording here.